Okay. Sheba, I missed all that good stuff.
I forgot. Sorry.
I forget to do it too. I'm messing with you, Sheba. It's all right. We good. We people. I don't mind. So what I'm trying to get you to understand is that there are many different things that you can do with it. Now, some people do it and they just live extra. They use it to travel and spend, and nothing wrong with that. Eating out nice and driving a nice car and all of that. But I always just caution: be careful. Plan for the fact that you may not always have that extra income. So devote most of it to investing, building your wealth, and then use, 10, 20, 30%. Treat yourself. You're doing two jobs, working a business, working your, a side hustle and your business. No problem with that. So again, there's multiple things you can do. And especially, I can't predict the future. If I could, I'd have a lot more money. But I will tell you that right now, in the inflationary times we are, a lot of people look within the next year that we possibly could head towards a recession. And in a recession, what happens? They cut back on jobs. In fact, in the mortgage industry, in the housing industry, they've already started to cut back because of the raise in interest rates. The mortgage industry is really cutting back because they ramped up so much when rates were low. Now they're overstaffed, and so they're cutting back. And so if that begins to trickle into, or the housing downturn trickles into other parts of the economy, 2023 might see us not where people are scrambling to hire employees, but companies, both large and small, are laying people off. And people who are not prepared, those who haven't prepared financially for that, could find themselves in a difficult situation. Okay. Any questions before I jump into the presentation? All right.
Sorry, I was just trying to get to. As far as supper is concerned.
All right, please just make sure you mute yourself. Please make sure you mute yourself. All right, so I'm gonna jump right in here. Do I want to do this one or do I want to do the other one? I'm trying to decide. Let me do this one. Understanding business credit. Okay, I'm gonna do this one here. Make sure I do this one. All right, so let me go ahead and share this. Okay, and you're gonna find that a lot of what I talk about reviews and goes back over the understanding personal credit, because I'm going to share something with you that most people aren't aware of. Business credit is nice to develop. When I say business credit, in terms of borrowing under your business name, okay, and the business being the borrower, you being the guarantor, and I'll explain why that's important, especially as you're growing a business. But the lender is going to make that decision to loan to your business based on what? Your personal credit. Okay. A lot of times people think, okay, well, I'm starting a business or I'm running a business. Even if my personal credit is not good, they're going to loan it to me based on what the business is doing. No, for most small businesses, you are your business. You and the business are one. So how you pay your personal debts, that's how they look at you're going to pay your business debts. And so you need to make sure that your personal credit is on point as well to be able to borrow under the business's name. Okay, and I'll explain to you the difference and how that looks in terms of your credit report when the business is a borrower and you're the guarantor versus when you're the borrower and you borrow it personally. So again, some reviews. You want to pull your credit and take a look at it at least every couple months. You want to dispute any errors, get any pending debt up to date, minimize your debt, but you want to make sure there's no errors or anything incorrect on there. And you want to make sure there's nothing fraudulent, that nobody's stolen your identity and things like that. And you want to check and see what's happening on your account. How are you paying down debt? What are the points that it's making that you need to go ahead and do to make sure your credit score is as strong as possible? Does anybody remember, because I'm not going to have you guys listen to me the whole time. Anybody remember when we did the presentation on credit? Anybody that was here, remember what credit scores go? Well, what's the range of credit scores? What's the low and what's the high? What's the lowest credit score and what's the highest FICO credit score? Anybody remember?
Is it 350 to 850?
You got the top end right, 850. Go a little bit lower on the bottom end. 300. So 300 to 850, exactly. 300 is the low, 850 is the high, okay? I've been in banking 30 years. The highest credit score I've ever seen was about an 815. I think like 815, 818 is the highest credit score that I've seen, okay? You don't need to be in the 800s. 700s will do, okay? So I want to talk tonight about how personal credit impacts small business, review important concepts regarding business credit, review the steps to improve business credit over time, review factors, talk about just, different businesses and different things that I've seen people do to have extra streams of income. And I've seen where people have turned that side hustle into their primary hustle, into their primary source of income because it's just grown. Okay. So, all right. So again, quick review. What does your personal credit report provide lenders with? Your payment history shows how your ability to pay back over time. It gives them your credit score. Okay. And they are going to make that decision. Okay. Based on your personal credit. Even for a nonprofit, okay, they are going to pull the credit of the individuals, even though for the nonprofit, it's a little bit different, but definitely for a for-profit business, they're going to look at the credit of the individual member or members of an LLC or owners. They're going to look at that personal credit. And so that's why building and maintaining good personal credit is so important. Okay, so let's take a look, and this is just, again, a quick review, the 5 pieces of the pie. This is what makes up your personal credit score. 35% is payment history. You cannot have a good credit score with poor payment history. It's one missed payment can drop your score 100 points. It makes up over 1/3 of your credit. 30% is credit utilization. This is the part more or less people know about, which is what your overall credit limit, staying below 30% of your revolving credit limit. So if I have $1,000 limit on this credit card, I need to keep that balance below $300, okay? And ideally keep it below 10% or 100 and pay it off as quickly as possible, okay? Don't want to keep large balances and paying month after month, and especially don't want to be paying the minimum balance. Third is credit history. How long have you been in the credit bureau? The length of time each account has been in there. And if you have been in the credit bureau for a minute, or even if you haven't, you don't want to close out credit cards that have been with you for a while, okay? Because you'll lose that history. Doesn't mean you have to keep a balance, okay? You can go ahead and pay it down to 0, but you do not want to close it out. Okay, and you want to maybe keep a small balance periodically, put something on and pay it off, because you don't want the creditor to close it out either, in which they sometimes will. They'll be like, this card hasn't been used in a while, and they'll want to close it out. 10% is new credit. As I said in the beginning, you want to borrow for need, not for want. Okay, you don't want to just borrow because they're offering you, walk into the department store and they're like, hey, we're offering 5% off, get a credit card. Be very careful of store cards, gas cards, and other things. They have very high interest rates in the 20s, 23, 25, 26%. Another thing I should mention to you too is in the fine print of a lot of credit cards, even if you have a decent rate on your credit card, if you miss a payment, okay, if you're delinquent on a payment, some of them some of the legal language will allow them to jump your interest rate up significantly. So you might have a credit card that you thought was 8 or 9 or 10 or 11%, and you were late on a payment or delinquent on a payment. And next time you look at your statement, you might see a much higher interest rate. So keep that in mind, okay? It not only damages your credit score, it may trigger some other things with regard to the interest rate on your cards, okay? Last but not least is credit mix. As I explained, that is the mix of your revolving and your installment. The credit bureau in its calculation likes to see a mix of both revolving and also installment. So what are revolving? We're talking about credit cards, home equity lines of credit, and we also talk about overdraft protection. Their loans or lines are that as you pay them down, it's available to you again. Your overdraft protection, you may have $1,000 in overdraft protection, and I highly recommend having it with your checking account. You never know when something you miscalculate and you overdraw your account. You don't want it bounced. You don't want an NSF. Your overdraft will kick in. Once you pay it back down, it's available to you again. Same like your credit card, same like a home equity. Installment are things like student loans, mortgages, car loans. They're fixed rate. As you pay them off, they close out. If you want more money, you have to borrow again. You can't draw on that installment loan again. Pay it off, close it out, it's done. Okay, so those are the 5 pieces that make up your personal credit. And so why is that important if we're leading into or talking about business credit? Again, a lender's going to pull the personal credit, look at your personal assets, your net income, as well as the business plan, and what the business is making in terms of approving a loan. And one of the things I want to talk to you about is I'll talk to it here in business credit. Businesses get and build business credit. So now we're going to talk about business credit. That's personal credit. They get business credit by making on-time payments to their vendors and suppliers. So the truth of the matter is, most business credit is initially not given by a bank. A lot of times it comes from the vendor or supplier. So let's say I'll pick on my friend Sheba. Sheba runs a little, she has a little clothing shop that she does. She does some little pop-ups and so forth. She's been doing it for 4 or 5 years, okay? Do some little pop-ups. She buys some outfits. She buys some wholesale. She sells some retail. But she's been dealing with one supplier for the last 3 years. And she buys, anywhere from $3,000 to $4,000, $5,000 worth of stuff from her or from that supplier. So she approaches them and says, or they approach her and say, you know what, you've been buying from us for a while. We're willing to give you up to $7,000. You can buy and you don't have to pay net 30. So that means that you can get your inventory from us, and 30 days after you've gotten your inventory is when payment is due. You don't have to pay up front instead of POD. Payment on demand or payment on delivery. We're going to give you 30. In the rare cases, it can happen 60 days. You have 60 days. That now Sheba has in effect received business credit. Now what she needs to do is also ask to make sure they report to the Business Credit Bureau. And I'll share with you the difference between the business credit bureaus and the personal credit bureaus. But basically now she has 30 days to get all that she needs and then sell it, make the money and pay back. And she doesn't pay any interest on that money. Okay. And that's where a lot of clients get their first piece of business credit. Okay. Companies also get business credit by receiving and paying loans. So maybe you can then, after you've had your business a while, you can approach a bank or a credit union and they'll give you a loan or a line of credit to expand your business. Now, here's the difference between a business loan and a personal loan. A business loan is to the business. Okay, so the borrower is the business. Sheba would just be the guarantor. So that loan or that line to her business would not show up on her personal credit report. Okay, so let's say she has the $10,000 she gets from the vendor, but she also gets a $15,000 or $20,000 line of credit because now Sheba's expanded. She's hired some employees. She's actually gone from a pop-up. She's got her own place. So she's got rent that she has to pay, utilities. So she needed a line of credit to pay her, make sure she has money sometimes to pay her employees, cover some other expenses. That $15,000 or $20,000 line of credit, just like the vendor approved business credit, will not show up on her personal credit bureau. If she goes to buy a car, get a mortgage, it's not going to show up there. She doesn't have to explain to some banker or mortgage lender, why do you have this other line of credit? It is to the business, okay? And so it does not show up on your personal. And that becomes very important because there may be times in that line of credit that Sheba needs to draw it all the way up, 90%, 95%. Maybe she's really needs to max out because she's got a big show coming up or it's a holiday. Maybe the thing she does sells very well in the summer during prom season, weddings and all graduations and all of that. So she really has to max out her lines of credit. She's glad that she can draw it up to 90%. And she's not using her personal credit because if she did that, her credit score would drop, but she can do it with the business credit, which is not going to show up on her personal score. I'm going to pause there for a second. I know I went through a whole lot. Any questions on what I've covered so far?
When you open a business line of credit,
Mm-hmm.
you're the personal guarantor.
Mm-hmm.
Does the increase show up on your personal credit?
No, and not if it's a true business line to the business. You are simply a guarantor. So if you even increase, you're talking about like you started with 10 and they take you to 20, or you're 20, they take you to 50?
Mhm.
Yeah.
No. When you first apply for it, like when they say we need a guarantor to say,
The
um,
inquiry will, when they inquire to pull your credit, but when they actually place the line and it shows as a debt, it won't show up on your credit. But the inquiry, because they're going to pull your personal credit bureau, so there will be an inquiry from the lender. Did I answer your question?
yeah, I'm just trying to figure out how that how that impacts your personal credit if you start a business and you need business credit and you're like, okay, let me do this thing. Does
Well, it
it
doesn't
hit
affect
your
your personal credit because it doesn't show up on personal at all. It's now, if it's a true business loan, okay, it's gonna affect and it's gonna report to your business credit bureau, not your personal. They're two different bureaus, and companies have two separate places that they record business credit and personal credit. Okay,
Yeah,
so
not the reporting of the actual loan, but like when you apply for it, and people, I think you say like you don't want to open too many new. Sorry, Keisha's asking me to any new lines of credit if it
mhm.
shows up on your credit.
Right, but if you're applying for a business line, okay, it's not going to show up. All that will show up is the inquiry. Okay, when they inquire, once they approve it, and let's say you're approved for that 20,000, that's not going to show anywhere on your personal credit bureau. Anybody pulling your personal credit, let's say then you go to buy a house, they're not going to see that $20,000 line that's to your business on your personal credit report. Am I confusing you?
Okay. Not confusing me. I was just asking about like when you do the inquiry, does it show up on your personal one?
The
Not
inquiry
necessarily.
will, but not the line itself. Do you see what the difference is? The inquiry. So let's say Capital One is looking at giving you a line of credit. There will be an inquiry that says Capital One inquired on your credit report. And then if they approve you though, when that line is approved, no one will see that line of credit on your personal, it will not be anywhere on your personal credit report.
Okay.
They will be reporting it to your business to the business credit bureaus. Does
Okay.
that make sense? There are two different credit bureaus, and I'll show you the two and the difference between the two in a minute. Okay, good question. Any other questions?
I got a question. How you doing today? This is
I'm
James.
fine, Brenda James. How are you?
Pretty good. Do you you were talking about the banks and stuff about the business loan. I know you was making an example, but do you have to have a bank account with that bank in order to get a business loan?
Very good question, Brenda. No, you don't have to, but many banks will require you to open your business account there if they give you the loan. Brenda, excellent question. So let's say you're banking with Bank A. That's where your personal and your business account is. But Bank A either declines you or you just decide not to apply to there for loan and you go and you apply with Bank B. If Bank,
Can you repeat that again? My phone, I got bad reception where I live at. What
okay.
you saying?
Okay, let's say you have your business account and your personal accounts with Bank A. Let's call it Bank A. Let's call it real bank, Wells Fargo. Let's say it's Wells Fargo. But you come to Capital One and you say, I'd like to get a small business line of credit for my business. Okay, you don't bank with Capital One. They're not gonna say no. If they approve you, they're gonna ask you for your personal for your business credit. They like your personal too, but they're going to ask you for your business checking account. Would you consider moving it over? They won't say you have to, but they will generally want you to move it over. The reason is a bank doesn't want to be just a bank that lends to you, but you keep your deposits elsewhere. So to answer your question, Brenda, you don't have to, but they're going to want to get it. Now, some banks will make it a stipulation that you have to move it. Some will say, okay, we're fine, but we'd like for you to at least open an account and we'd like you to move your primary relationship, or we're going to try to get you to move your primary. But it's not a requirement. They're not generally going to require you have to bank with us first. Okay. They will consider making a loan, but trust me, a banker is a salesperson. I used to be a small business banker. If I get you that loan, Ms. Brenda James, my boss is going to want to know, because remember, loans are not the only thing that make banks money. Deposits are what we loan out. So if I get your loan, and if I get your deposit relationship, if I get you a small business credit card, if I get you to move your personal accounts, that's increasing the deposit base and so a banker is not just about making loans. They're trying to bring in all the things that make revenue for the bank. And that's deposits, that's merchant services. Everybody know what merchant services is? That's where you can accept credit cards. Okay. So let's say Brenda James, we call it BJ Inc. Let's say you accept credit cards. Let's say you have a business, Brenda, what would you like to do, Brenda? Tell me something you'd like to do. And what kind of business would you like to run?
Open up a 24-hour shelter and recreation center.
Okay, so you're going nonprofit on me. Yeah, Brenda, you're going nonprofit. You're going to make it hard on me. Can't do it. It's harder to do with the nonprofit because the nonprofit is generally not going to take credit cards. Let's say, Brenda, that you open up a place for folks to come. It's a ballroom and people can rent there for all kinds of events. Okay, and you do catering. You do catering and you have a place for people to do events. Okay, so but you take credit cards. Okay, that's merchant. So if I'm a good lender and I'm trying to get your business and I get you that loan, I'm going to say, Ms. James, can I make you a quote? Can I see, if I can get you a credit card business? Also, I'd love to talk with you about moving your deposit relationship over here. Or I may have told you, if I get this loan approved for you, I'd really like you to bring your deposit relationship, your checking, your payroll, your operating account, bring it over. It's not going to be required that you have it already, but I am going to, there's no way I'm going to not talk to you about trying to move that business and bring all the business over to me. Does that make sense?
Yeah, yeah. And then I got another question. What if
No,
like,
only one question a day, Brenda. Sorry. I'm just messing with you. Go ahead. I am just kidding.
Look, I was gonna wait till at the end anyway. We said when any question, I was gonna sneak it in. What if like suppose I just started my business for the past, I'm gonna say 3 months, right?
Okay.
I got a little bit. I'm gonna say I probably got I'm gonna say 4,000 saved up, and I never had like a bank account because I don't, trust in the banks anyway. But I want to tell the bank people that. Can you walk in?
Brenda, I'm a bank people. You just told me.
Yeah, but I trust you because
Okay.
you telling us the secrets and how to get on our feet and stuff.
Okay.
So, and my credit score a 750, right?
Mm-hmm.
Would they take that in consideration?
Well, here's the thing, Brenda. What are you trying to borrow money? Or you're just opening an account? What are you trying to do?
Trying to get my business up and running.
Okay.
More.
All right. So here's the couple things. First of all, what I do now, do you have your business? Is it incorporated? Is it an LLC? Is it a sole proprietorship? How is your business established? What's it established as?
I'm gonna use the example you made. The corporation.
Okay, so let's say it's an LLC, a limited liability corporation. Okay, if it's established as an LLC, yes, absolutely. They'll ask you for the articles of incorporation. You supply that, then you can open the business account. But here's the thing I will tell you, because your business is only open 3 months, it's going to be difficult for you to borrow money, even if you have 4,000 in the savings, because unfortunately, banks know the statistic that 80% of businesses fail in the first 3 to 5 years. So a lot of times it's very difficult for startups to borrow from banks or credit unions. They generally want a loan to a business that's been in operation for a while. But that doesn't mean there isn't funding that you can't get. There are other institutions that would love to talk with you, and I'll talk about those. But what I would recommend, if that were me, I would open a bank account, because I definitely want to get a business bank account and have money going through there. You never want to commingle funds. What do I mean by that? You don't want to run your business through your personal account. If I'm running a business, okay, I want to have a business account. That's where I pay the checks out of. That's where I deposit checks into. I don't want that being run through my personal account. Okay, keep business and personal separate. So you have your LLC, you go set up your business account. Okay, now when you need to, you're 3 months in and business is going well, but your $4,000, you don't want to use that. You want to keep that in your savings for emergencies. You want to borrow money. So I just told you it's very hard to borrow from a bank or a credit union only 3, 6 months, even a year in. You have no track record. The business doesn't have a track record. So it's hard to go on that. What lenders want to see is 2 to 3 years worth of business financials to see how profitable you are. But there are institutions called CDFIs, Community Development Financial Institutions. Okay, there's some down there in the Richmond area. There are many up here in DC. These are not, some of them are nonprofits, some of them are banks, but these are nonprofits that are established to help small, minority, and struggling businesses get started and get some working capital. They can take risks with smaller businesses that banks and credit unions cannot. Okay, Community Development Financial Institutions. Okay,
Can you write that in the group chat? Can you write it?
I'm taking notes too, Ms. James.
Okay.
I'm gonna stick it in here. I got you. A CDFI. I'm gonna type it in. I work for you guys. So Community Development.
Yeah.
Financial.
So yeah, that was good. So basically, that'd be for the same thing too. If you was acquiring about want to purchase a home too.
No, the home is different. A home is personal credit. This is business. Okay, so if you're trying to buy a house, then you're borrowing personally. You can't buy a house on the business. Now, a business can buy commercial real estate that you're operating in, but if you're talking about buying a house, you know, that's different, okay? But for a business, community development financial institutions are there. They do help with personal credit too. Sometimes they'll give you what's called a credit builder loan. You're trying to rebuild your loan, but they're really good and important for small businesses because they're willing to take those risks on businesses that are 6, 9 months old, a year old, just kind of starting up. Now, they are going to look at some financials. They're not going to just approve everybody because they don't want to get their money back, but they know that they're taking a risk and they can work with businesses that are newer and don't have as much profitability and so forth. And a lot of people don't know about CDFIs, but you can Google them. There's a list of them there in Richmond. Every major city has them, and they're not competitors for banks. Banks fund them. Banks put money into them. The government puts money into them to be that resource to help small businesses, particularly those that are not yet what we call bankable. They're not 3, 5 years old. They don't have the revenue size or revenue and profitability to necessarily be able to go to a bank or a credit union and borrow money. But these CDFIs can, not in all instances, can in some instances help with that initial loan. So let's say, going back to Ms. Brenda James, and I see your hand up. I'm going to call on you in a second. Say you say I've got $4,000 in the bank. I'm running my little business. I really need about $1,500, $2,000 to get this little machine that's going to help me do more of this. But I don't want to use up my savings. That's a perfect loan for a CDFI. It's too small for a bank. You're too new, but there are some CDFIs that would love to work with you and get you a small loan like that to help your business grow and keep growing. Now you're 3, 5 years in, you're doing $400,000 in revenue. Okay, your business has grown. Now you can come approach a bank because you're 4 or 5 years in, you've shown profitability for your last 2 or 3 years. Now a bank wants to talk to you because now you want a $40,000 line of credit. Perfect. Okay.
And this is my last question. So what if you doing all that and you on Social Security?
Well, nothing wrong with that. You just got another stream of income. Now, the only thing you have to be careful of, and this is what you talk about to your accountant, if you make a certain amount of income, your Social Security will start getting taxed. But there's nothing wrong with making, Social Security is just one stream of income. I encourage people to make a separate stream of income. So let's say you're getting X amount from your Social Security, but you also have a small side business that you're running that pays you another amount. That's a good thing. That's not a bad thing. Okay. Now, if you make over a certain amount, they'll start taxing your Social Security, but that's a nice problem to have because I'd rather have so much money that they start taxing my Social Security as opposed to just relying on my Social Security and I'm running short of money every month because I don't have a side business coming in. I don't have side income coming in. So that doesn't, running a business doesn't preclude you. In fact, some of the fastest growing or largest group that are going into starting businesses are people who are retiring. And now some of them may be collecting Social Security, but they're retiring from their jobs and they want to now run a business. Kids are grown, they have the free time, they have the resources. So being on Social Security doesn't preclude you from making a separate income. Absolutely. All right.
Now, some people scared, be like, I don't want to get my Social Security anymore. And I started this company. And some people be like, I'm going to get turned down because that's the only income I got. But like you just said. So that's why I asked that question.
Yeah, no, a CDFI is going to look at your business plan. They're going to look at how you're running your business, how much profit you're making. If you're relatively successful, if you have a decent business plan, they're not going to look at, in fact, your Social Security will be a positive because you have another source of income to take care of your personal expenses and you can put all of the money back into the business. Okay.
All right. Thank you. Thank y'all for being patient too. Thank you.
Oh, no problem. Anytime. Now, somebody else had their hand up?
I did, Ms. James. Thank you for those questions.
Yep. Go ahead, Jada.
So I have a question in terms of, you said, what's it called? A merchant credit?
Merchant services. You're talking about where you're accepting credit cards? Okay.
So could you go into that? Because but I accept credit cards. Well, I accept payments, but it's more like people are donating. They're not buying anything, but they do it like Venmo or Stripe or Venmo or Cash App or PayPal.
Okay. Well, what type of business you have, Jada?
I'm Keisha. Jada's my daughter.
Okay.
And I'm just
Oh,
on her
all right.
dad's side. I guess, and Sheba could tell you, it basically really is like a nonprofit. I was just actually talking to a tax lady, and she's like, you need to apply for a nonprofit, but it's considered a social enterprise because I do everything that a nonprofit would do, but I'm just not a nonprofit.
Yeah,
So they
you want to
classify
be
it as
set
a
up.
social enterprise.
Okay, you want to be set up as a nonprofit because until you're set up as a nonprofit, people can't deduct the money they're donating to you. Okay,
Yeah.
so you need to be set up as a 501c3. It takes a little bit. You can go to an attorney. It costs a handful of dollars, but you want to be set up as that so that when people donate money to you, then they can write it off if you're a 501c3. Okay, so that opens you up. Plus, you have to be a 501c3 if you want to in the future go in and get grants and apply for grants from, whomever, banks, other foundations, and so forth. Even though you're doing a social enterprise and helping the community, they're going to want you to be a 501c3, an official recognized nonprofit. Okay. So,
Yeah.
but merchant services, that's a little different. Not that a nonprofit can't, if they're running some events, they can take credit cards, but it's mainly for profits. That's where when you go and you swipe your credit card, you go to a store and they say, okay, how you want to pay, cash or credit, and you use your credit card. That's called merchant services. That's how a business is able to take credit cards. They're a bank or a third party is helping them accept those credit cards. When you go into a restaurant and you use your debit card or your credit card, though, that's called merchant services. And so banks set that up, and banks do that as well. And you have other companies that's all they do is merchant services. But like I was saying, as a lender, my job is to get all of your business. So that's not just your loan business, that's your merchant business, and that's your deposit business, that's your personal deposits, everything, because that's how you grow the bank. That's how you grow the institution. Okay. But I agree with your accountant. You definitely want to talk and see about getting your social enterprise as a 501c3 so that down the road, people that make donations to you can write that off tax wise.
Okay. So this is kind of like a two-part question.
Okay.
So I have and maybe I shouldn't have done this. I have two, well, I have 3 accounts with one bank.
Mm-hmm.
2 are business accounts and 1 is personal.
Mm-hmm.
And so I asked them, could I get a credit card, right? Because obviously it's beneficial because everything I do for my business, I would like to get, the perks of like a credit card, right?
Mm-hmm.
They said that my business would have had to been, they said that they would like for me to have like a history of, like you said, I think they said 2 years.
Mm-hmm.
And so my thing is, when I was talking to someone, she was saying that it is other banks, Keisha, that would give you a credit card, because I'm like, well, like everything I do in terms of like just gas or taking like my team out or everything, obviously it's getting paid for, but I would have liked to get like perks from a credit card of doing that.
Okay.
And then like I went to Verizon to be able to get like a laptop and like a phone, and the lady said, well, I told her it was for my business. And the guy was like, oh, well, if you have a business, then you should, if how many, he said, well, how many people are you employing? And I'm like, well, 6. And he was like, oh, well, because my bill is $153 a month. And so he was like, well, if you open up a line with 5 people, like you could get 5 lines for your team of your business, and it would be 200 all together, because that's the perks of you having a business. So it would be like $40 something more for me to be able to get a phone for me and everybody on my team. And then you get like a special on a laptop. But then he also said, well, but your business needs to be established for 2 years. And I'm like, so, so I guess I don't qualify for that. Like, I don't know. When he said,
let me ask you this 1 second before you go further. How have you established your business? You're not a 501c3, but have you registered the business there?
Yeah, I am a LLC.
Okay, so you registered, so you have it as an LLC. So technically right now, it's really a for-profit business. It's not a nonprofit because you haven't registered.
It is. Yeah, that's what I was saying is that I am an LLC. And when I met with an accountant maybe like 2 weeks ago and was telling her everything that I do, she was like, Keisha, you should definitely be a nonprofit. And I'm like, I know. When I learned about a nonprofit slash social enterprise, again, like Miss James, in terms of like trusting in the government and all that, I'm like, oh, I don't want to be a nonprofit. I'd rather be a social enterprise and just do what I do. But yes, I'm registered as an LLC. And then she also said something like, because you have people under you, you might understand this, like you probably need to move over to a S corp. I haven't learned about that yet, but I remember her saying something like that.
No, if you're an LLC, you have the same protections. An S corp, the reason now, if you were a sole proprietorship, I could see, but if you're an LLC, an LLC is a limited liability company, and an S corp is a S corporation. Both limit your liability. Now you want to make sure you take your minutes and you track everything. But the reason you're an LLC or an S corp is to protect you from personal liability. So if somebody sues your business and they win, they can take everything in the business, but they can't come after your personal assets. But an LLC gives you, in fact, most people do LLCs now. I'm surprised your accountant said that. Very few
It
people
was
do.
something about an S corp. I don't know.
Now,
I
there
just
might be
remember.
something specific, but both, ask her why, because both of them give you the liability protection, which is part of what you want. You want the liability protection. Now, she may be talking about something accounting wise, but if it's for liability protection, an S corp gives you, an LLC and an S corp give you that, whereas a sole proprietorship or partnership do not. And that protection is, if you get sued, you don't have to worry about. Now, you don't have to. They'll still try to. Attorneys do that, but it gives you some protection versus a sole proprietorship. I would ask that accountant why they recommend it. What specific benefit does an S corp give you that an LLC? Because most people today don't do S corps. Most people are forming LLCs.
Okay, so what about like the stuff I was telling you about Verizon and like just everything that I do? I mean, just everything is like, well, you need like 2 years to get a credit card. And I'm like, I got 2 business accounts with you guys, and I gotta like wait 2 years or and even like
So
even
how long, Jada? How long have you been in business? I can say
um
Jada. Keisha. I'm sorry. It keeps flashing up Jada in front. Keisha.
it's been, I mean, officially when I registered for my business, it was 2019. As far as like true funding coming in, it was like last year.
Okay, so just a year.
Not even a year as far as like funding coming in. Like,
Okay.
yeah.
Yeah, it's hard to get around getting past that. So are you just looking so you just really want the perks of using the card for all those expenses and getting the cash
Yeah,
back?
well, like just looking at like, YouTubes and stuff like that, people are like, you're crazy to use like debit cards and not use credit cards nowadays. Number one, you could build up your credit and you just don't get any benefit of like basically like everything you were saying of just using a debit card. Like, why not use a credit card and you build up stuff, you get perks, you get points, as long as you're like paying everything on time, you get like a lot of perks with the credit card, which is you don't when you're just using it like coming just straight out your account.
Right. Yeah. But there's also dangers with using that credit card as well, because if you don't pay it now, it becomes a bill that you have to pay each month. But yeah, that is one of the challenges, and not too many CDFIs. And in fact, unless they're a bank that's a CDFI, very few of them. You're probably just going to have to wait and have the business get to the point to get a business, to get a business credit card. I wouldn't stop though. If you've had it for about a year, I don't know what your balance is and your personal credit is, because they still are going to pull potentially, even as your business, they're going to not potentially, they're going to pull your personal credit. Once you've been in a year, if you've got a year worth of funding, I might approach another bank or credit union or so forth. If your credit is solid, everybody may not require you for 2 years, especially if you've got some solid funding coming in, you can show some revenue. I won't ask you to disclose the dollar amount, but you may have to wait a couple of years for the business credit card. Now, it doesn't mean you have to wait that long to talk to a CDFI. If you've got genuine income coming in and you say, you know what, I'd like to, let's use the laptop. I want to buy 2 laptops for the business that I'm running. You could approach them. You say, I don't want to use the money I have in my savings. I'd rather buy it, have them put it to the business and report the business credit, and I can keep my money in the bank and I can pay the monthly payments. Generally CDFIs don't require 2 or 3 years being in business. They require that you show, some profitability, a decent business plan, and they're willing to work with you. But like I said, most of them don't offer credit cards. They don't have that sophistication. That's generally banks. So you may have to wait, but it's not killing you. It's not killing you not to have a credit card that you're running everything through. Yes, there's some perks and some maybe cash back and some miles that you get with it. But the more important thing, Keisha, is building your business, building it correctly, making sure that you have good accounting, good bookkeeping, that you understand how am I going to expand and grow my business and that sort of thing. And eventually it'll come around where you've been in business long enough to potentially get a business credit card, to use for the business, but it does take sometimes a couple of years to establish the business for it to be for it to have been in business long enough for a bank or a credit union to take that risk. But if you've established yourself, have good credit, you may find a smaller bank or smaller credit union that's willing to give you a small business credit card. Don't give up, like I said.
Do you suggest me, because my accounts are with a small credit union, it's with a Virginia credit union.
Mm-hmm.
Do you suggest me opening up account at like a major bank?
No, if the credit union's doing it, but I'm assuming they're the ones that turned you down, because I'm assuming you went there first.
Oh no, I mean, I never like actually tried. I just, when I opened up the second account,
Mhm.
right, because we got a grant,
Mhm.
and to make sure that money is separate than my like traditional.
Right, you don't want to
business.
commingle the funds. You put in a separate
Exactly.
account.
So the separate account, and I asked the guy like, well, can I apply for a credit card? Do you think I could get a credit card? And he was like, well, your business just hasn't been open for a long time, so I don't think that you would qualify. And then, like I said, when I went to Verizon to try to get like to talk about like a laptop, and the guy was like, well, you can get 5 lines, how many people are on your team? I told him, and he was like, well, you got to bring your credit in here in terms of your business. And I'm like, well, I don't really have no business credit yet,
Yeah, what I would do, yeah, and again, in terms of actually, he wasn't supposed to tell you that. He wasn't supposed to tell you that I don't think that you'll qualify. That's not good banking. He's supposed to say no. Go ahead and apply, even if he thinks that. You're not supposed to.
Oh yeah, he definitely told me no, you're not going to qualify because
you're not supposed to discourage somebody from applying. That's a no-no. Even if somebody just started their business yesterday, they came in and said, Mr. Chrysostom, I want to apply for a loan when I was a small business banker. I'd have to be like, yes, sure, you can put the application in, even if I knew. Yeah, you're not supposed to do that, but that's a separate note. But what I would do, Keisha, is like I said, I would continue to run the business. You're doing everything else properly. What I might do, if you want to try to establish business, find a community development financial institution, a nonprofit down there. Let them know you want to just start establishing some business credit. You'd like to maybe there's something that you need specifically for the business and you have the money to buy it, but you just like, again, the laptops is a perfect example. Maybe it's $2,000 that you needed for laptops. Okay. And you just want to take out a small loan to get some equipment for your business and to build business credit. Now, as you do that, now you're going to build business credit so that down the road, when you later go to apply for the business credit card and they pull it, they'll see that you have business credit and personal credit established. It's still going to go based on your personal credit, but it'll give you a leg up. But sometimes you have to just be in business long enough. It's just, they want to see that you're, like I said, unfortunately, a lot of businesses fail within the first year or two of being in operation, and lenders and other companies know that, so they're hesitant to take a chance on a business because they don't know what are the 80% that are going to fail versus the 20% that will make it.
Okay, and this is just really fast. I remember the first class you said, first of all, I remember I was scared to check my credit. I wound up checking it.
Mm-hmm.
This is 676.
So what were you scared about? Why are we so scared, huh? Why are you so scared, Keisha?
I don't know. I told you I was scared that time.
But now it turned out to not be that bad, right?
Yeah, I called Sheba. Sheba said, girl, you can get a house. I said, look at God. I had to go to like a nonprofit, and she was like, Keisha, and I'm like, my heart was beating and all that other kind of, I don't know. I was just scared. But
now you have a good credit score. Now let's make it great. Just look on there and see what are the reasons that you need to what you need to work on to move it from 676 to 720. You know, it may
Yeah,
be.
remember I told you I didn't really have like any credit. Like I never had a credit card. I never had like a card note. I just
Okay.
always did everything straight up, cash. If I got it, I got it. If I don't, I don't.
Jay,
But
Keisha, can I ask you a question?
yes,
It's kind of a personal question. Were you raised by your grandparents or close to your grandparents?
yes, I was raised in the house with my grandma.
You know how I know that?
Hmm.
Because your grandma taught you that. She's like, don't be borrowing too much money. You pay cash. That. And I'm not saying it's a bad thing. I could tell that's
Yeah.
an older mindset. Your grandmother, she didn't owe anybody. She didn't want anybody knowing, own her stuff or nothing like that. Anyway,
Even my mom, she never used debit cards. If she didn't have the cash, I mean, even until she just died recently, it was always cash. She never liked debit cards or anything.
yeah.
But did you not say that we shouldn't do those cards like Capital One, where like you put your own money in?
No, a secure
Yeah.
card is fine to help you build
Oh.
credit. If you need to
Oh,
build
okay.
credit, no, secure cards. There's another one called a credit builder loan. Some of the CDFIs or some of those nonprofits offer them, but there's also a company called self.com. You can go and a credit builder loan, they give you a small loan. They don't give you the money. They stick it in a savings because that's going to act as collateral. Okay. But see, at 676, you don't necessarily have to get you could get a bank to give you an unsecured card. You don't, I mean, 676, you should be able to get a personal credit. Now, the only thing is, if you don't have much credit in there, they may be hesitant. But if you have to go to secure card, there's nothing wrong with a secure card. The whole objective of a secure card is to get more credit reporting. Okay.
Oh,
to get
okay.
public reporting for that. And the same thing with the credit builder loan, because then you have the credit builder like Self or whomever reporting each month saying, hey, Keisha's paid on time. That'll help raise your score along with all the other behaviors we just talked about, Keisha. We can't forget some of these other behaviors, right? Which is, let me go back to it here. Oh, missed it right there. Which is stay below 30% of whatever your credit limit is. Make sure you're paying on time, okay? And don't have too many inquiries. You do all that, you'll be in the 700s before long. But yeah, I didn't say don't do it. I said one of the ways to either build for people who have none, or you want to rebuild credit if your credit is really damaged. Your 676 is not that's considered fair to just below good credit score. So you could borrow, you could probably get a credit card without that. Now, I don't want to say anything against what your grandma and your mom taught you. You can put something small on there and pay it off each month, but you just wanted to report paid as agreed, month after month. And you can do that with a credit builder loan, have both of them reporting, and you'll see your score go up, especially if you make sure pay it on time, stay below 30% of whatever credit limit they give you. They give you a credit limit of 500, don't put more than 50, 60, $70 on there, pay it off each month. Make sure your oldest credit cards, if you have any, stay open, and you'll be fine. You'll be above 700 soon. Did I lose you, Keisha? Oh. All right. So,
I think she froze, but I got her.
all right. All right. Let me get ready to wrap up at 7:06, and I don't want to keep anybody too late. All right. I want to take you to explain.
Sorry, my computer died. I'm sorry.
Oh, no problem. I said, was that helpful for you?
It was helpful. Can we just pay everything? Can you just pay it off? Like if I brought gas for $50 on a credit card, is it wrong to
Absolutely.
just pay the $50?
Yep, you just pay the $50, then you don't pay any interest. Everybody knows that if you have a credit card, a personal credit card, and you have no balance going into that month, and you put whatever on, if you pay it off that month, you pay no interest. Doesn't matter what the interest rate is. Okay, so if you want to do it that way, if you want to put, and that's what I recommend, put $50 for gas, pay it off as soon as the bill comes. Put $25 in groceries. You take the kids, grandkids out. You spend $40. All right, I'll put it on the card. Pay it off as it comes periodically, just to make sure it reports something. I have the cash, but I'm just going to put it on here so it reports. Okay. So for
I'm going to zip it. This is literally the last thing.
Okay.
I was looking at reviews of this credit financial literacy guy, and he charges $3,000 to like teach you credit, trade lining, like all that other kind of stuff. Do you recommend it?
Why would you pay money for that when I've just told you everything he's going to teach you for free? Why you want to give your money away?
Okay.
If you're going to do that, Keisha, here, you want my cash app? Keisha, why? Keisha, he's just taking your money. He's
all you gonna do is look at your credit and dispute the ones that need.
No, I wouldn't know him. It's the guy on the internet called him 500.
No. Here's the other thing, Keisha. Hold on. Here's the thing. There are nonprofit organizations right there where you guys are in Richmond that you can go get everything you need to learn about your business. There's the SBDA, Small Business Development Association. These are things that your tax dollars pay for. Why are you going to pay somebody that kind of money for things that you can just go? There are free services out there. Through the SBA, you can go through SCORE, Service Corps of Retired Executives, but reach out to your nearest Small Business Development Association. Tell them I have a small LLC. I'm looking to grow it. What classes do you have? And just begin there. You don't need to pay anybody that kind of money. No.
Okay.
I got one question. You know how they tell you get your $300 security account, right, to start off? Cause I got one of my credit scores like 675, 550 or something else. What if I put $300 on there, right? But don't have the money to like pay it back. Do that affect my credit score?
Yeah, of course. You don't want to ever borrow. If you can't make the payment, they're going to write it delinquent. You never want to charge money on something if you don't have the money to pay it back. If you don't pay it back when the bill comes, yeah, they're going to mark it delinquent. It's going to damage your credit.
Okay, because someone told me it did because it's your money that you put
No,
on
no,
it.
no. A secured card, no. That money in that credit card, they're still going to report it as delinquent because you didn't make the payment. What they'll do is if it goes delinquent long enough, your money is collateral, they'll take it out of the money that says collateral, but you're defeating the purpose. The whole reason for a secured card is to help you rebuild credit, not for you to, see, that's why you got to be careful who you listen to. It's not for you to borrow the money or put the money on the credit card and not make the payment. Then that's going to damage your credit. And then, yes, eventually they're going to take the money out of the savings account because they're not going to lose their money, you know? So no, always pay anytime you borrow money, pay it back. You know,
Not secure. I forgot what's them account that they say to build your credit that you put your own money on there.
That's a secured card. That's a secured credit card.
And then I got another question. Like you were telling Keisha about her score or whatever. So me, because I had a grandma raising me too, so I never did an account. So like 2 months ago, I tried to do it because it was like on it what it is, credit or credit assessment or whatever. So it was like do it, but I still ain't get accepted. I guess like it said, he's saying not enough credit history. I guess because I never had credit cards.
Right. Well, that's why, Brenda, it's not that you're not getting accepted. You have no history out there. You need, if you're going to establish credit, you're going to have to use a secured card or a credit builder loan to get some. What it's telling you is that you don't have any history out there.
Okay. And then one number was a number 4, but the lady said that you can't have a number 4.
No, you can't. No, the lowest the credit score is
50 and 675.
No, the lowest is 300. 300 is the lowest credit score. You can't have a 4. But chances are, if you try to pull your credit, but you're saying you have a 675. How you have a 675 and another one that has no score?
Yeah, Apple said that 675. I think Experian or TransUnion got the 550, and
So
then
you have credit scores out there. If you've got a 6, that's a big gap between your scores. But unfortunately, Brenda, I can't really answer for you because I can't really take a look at your personal credit. But what I would do, what I would recommend is find a good nonprofit, not these people who you have to pay. There are good nonprofit organizations out there that will help you work on your credit, and they shouldn't charge you anything. Don't go to anybody, you've got to pay for it. They'll look up some nonprofits that'll help you, and they'll walk through step by step, looking at your credit, giving you advice, but don't go to anybody that you have to pay. Okay. I just have to finish this up because I have to wrap up in a minute because I have to jump to something else. I want to go over this though for you. Okay. What you want to do for those, oh, you're welcome. You want to obtain your tax ID for those of you who aren't already established. You want to get a federal tax ID. You don't want to open the business using your social. Okay. And if you're doing an LLC, you do have to have a tax ID. Also, you want to get a DUNS number, okay? It's a free, you go to www.dnb.com. So as you start to establish business credit, you want to have them reported to Dun & Bradstreet. Dun & Bradstreet is one of the 3 business credit bureaus, okay? The 3 business credit bureaus are Dun & Bradstreet, Experian, and Equifax. TransUnion does not do business credit, okay? And business credit works different than personal. It goes from 0 to 100, and a good score is a score of 80. Okay. You start getting business credit when you either borrow in the business's name or you have vendors that give you credit, and they report to the Business Credit Bureau. Okay, let me just show you what the difference is with the personal and business. The three are Experian, Equifax, and TransUnion for personal, Equifax, Experian, and Dun & Bradstreet. They both get the same type of information, but both late and early payments are reported on the Business Credit Bureau. So paying early helps you on the Business Credit Bureau. Paying early doesn't get you any better credit on the personal. Now, it may save you money in terms of interest because you're paying it sooner, but they don't report you more than on time for personal. Okay.
So are you saying that I'm okay? I don't have any business credit. I don't think. So am I supposed to register my business with the
Yes.
Dun people?
Still get your Dun & Bradstreet number. There's no cost to get your D&B number. And this way, let's say down the road, you start working with a vendor or someone, you give them your Dun & Bradstreet number and you tell them, hey, I'm getting this service from you. Can you report on my D&B number? Yeah, you don't have to have business credit to establish. Get your DUNS number. It's no cost to getting it. Just have it. And then as you work with other vendors or people who may give you credit, you can give them your DUNS number and ask them to report your business credit under your DUNS number. Now, if you get a loan from an institution, you can share your DUNS number with them and they can report it under your DUNS number for the business credit as well.
Can you put that name in the chat? Or that was on the piece of paper, because I've been screenshotting everything you put up. That name you just said was on the piece of
What you talking about, Dun & Bradstreet?
yes.
I'll write it in here for you.
Okay, thank you.
Right in there on the track. And I'll put
Thank
you're welcome. I'll put the website as well.
Okay.
I'm sorry that we don't really know. Like, you know, it's just a lot. I'm sorry.
Wait, no, hold on. Who's that on my iPhone saying I'm sorry?
Keisha.
Oh, Keisha, there's nothing to apologize for, Keisha. Keisha, I'm your brother. Why you apologize?
Because I know you probably like, what the world?
No, Keisha. No, a lot of people don't know. Here's what people do. They don't know and then they don't ask questions. That's the bad thing. There's a lot of things we don't know. Don't ever apologize. I'm here. Sheba brought me here because I told her I love what I do and I love helping my people do better. That's it. So don't apologize. There's nothing wrong with asking questions. Don't ever apologize for saying, I don't know this, but I want to know. Okay, we're all, and to see people get that word ignorant as being really bad. Ignorant just means lack of knowledge. There are things I'm ignorant of. And if I don't know it, then I go to the source of people who do know. Okay, so don't apologize. I'm glad to be here with you guys. There's nothing I'd rather do than share knowledge.
I appreciate it, because some people with business, they leave off that other part, like would you explain it, or they don't try to tell you, you know, how to get it when you ask other companies got LLCs or nonprofit that maybe been around for a minute, and you know, you helping them do the work too. But when you try to get on, they act like they, you know, don't know, or be like things might have changed. You know, they just leave out a lot of stuff. So that's why we asking a lot of questions. We're like, well, Dad, we could have been did it, you know.
No problem. But like I told you, check out the SBA and the SBDC, Small Business Development Centers. Those are government agencies that you can work with, and they have classes, they have small business classes, they have programs. And Sheba put a couple things right here in the chat. So the Jackson Ward Collective Foundation, she says holding a business event. Okay, Southside Community Center for home buying classes. There are a lot of nonprofits and government agencies out there that offer this. Please, before you pay anybody any money, check with some folks and ask, are there free services out here? Because a lot of times people will take your money and not give you any more information than some. Now, some things you do have to pay for. Everything's not free, but I'm telling you, there are a lot of classes, a lot of workshops. I do workshops up here in the greater Washington area for Bowie State University. Universities have small bit, just check around, okay? Check around, do your research. A lot of universities and programs, government has different programs. You can sit in on classes to learn how to run your business, how to do different things. They'll have run programs for nonprofits, all of that, okay? So before you spend money, look and see, is there a way that you can get it for free? Check with government agencies, okay?
Yeah, the other day Sheba asked me for a W-9 and I gave her one with my social security number and she was like, well, do you have an EIN? And I was like, yeah. you know, but I didn't know that it was better for me to put down the EIN than my social security number. I just thought that like they could look it up, like, you know, I just didn't know.
Mhm.
So she explained to me like he should put the EIN number down.
Exactly, that's all. And like I said, it's always best to learn, and it's always best to learn amongst family. You don't ever have to apologize. So, all right, ladies, this has been real, and I've enjoyed it. If you have any other questions, you shoot Sheba an email. She knows how to get in contact with me. It's been great working with you. I know you're going to be extremely successful, and I thank you for taking your time. Again, apologize for running late this afternoon. Getting here, got caught up in a little traffic, but again, it's been my pleasure working and talking with you these last several weeks.
Mr. Sean,
Mhm.
do you like like I know you did this, you know, like sometimes like with me at home, a lot of distraction with the kids, but I'm still listening and focused with all these weeks I've done. But do you do like one-on-one consulting for something I missed and want to start up, you know, but forgot some of the, you know, like some of the stuff that we talked about in the, you know, like in week 1 and week 2,
What you talking about? Come back and do a refresher class?
or like a one-on-one class?
Yeah, I generally don't do one-on-ones because unfortunately my schedule is jammed up, and I have other workshops I have to do. So and the challenge also with one-on-ones is I can't give specific information. The bank doesn't allow me to do any consulting or one-on-one information. They just want me to teach and educate. So generally I don't do one-on-ones because it ultimately comes down into you're going to ultimately ask me questions about what you should do, and I can't do that.
Well, can you shoot like an email every time you do a different, you know, like every time you do maybe like a different free little workshop and stuff? Can you shoot an email? Cause you know, like different people have different questions, or you know what I'm saying, different, you know, answers. You know, the more people you know, you do these type of Zoom workshops with.
Yeah, what I can do now, most of my workshops, I'm up here in Greater Washington, but I can shoot Sheba if I'm doing one for one of my nonprofits, because since we're doing it via Zoom and it's open to other people, I can shoot Sheba the information if there's a group or organization, either I'm doing a workshop or if they're doing something I think will be beneficial. Sheba and I are family now, so I'll send her anything I have.
Okay, I appreciate it. Thank both of y'all. Thank you too, Sheila.
Absolutely. So I have all the recordings and I have all of the presentations except for last week. I'll send it to everybody who signed up because I know everybody wasn't here. Like a lot of people signed up, but you know, schedules. So I'll send you that, but you all know I am always around and teaching and spreading. I gave it to Sean this time. So
She really is, Sean. And I want to say thank you to Miss Barbara too, because Miss Barbara, I know we'd be like, you probably be like, what the world when we get on? And I thank you, Miss Barbara, too.
Well, no problem. Well, you guys have have a safe 4th of July. And like I said, any info that I get, or if I'm running something, I'll let Sheba know. But if you have any questions, shoot them to her and she'll forward them to me, okay?
thank you, Sean. Thanks, y'all.
Okay.
Take care. All right.
Stay safe.
Mhm.